Okay, 1400, let's crack on. Hey everyone, thanks for being here. I'm really surprised. There's just looking at the list, there's probably 15 of us here, so thank you all for sharing, a random Thursday afternoon with some little person in Norwich. So hi. Again, this isn't going to be a one-man show, so to speak, so if you do have any comments or you want to pipe up or whatever, just put your hand up and you'll have the mic. So yeah, I've got a broad brush thing that I want to cover, which is wealth generation, the brutal truth. And that encapsulates quite a lot of stuff, quite a lot of different things. But the first thing I want to talk about is cognitive biases hindering you, and that sort of links into fads. And this is something which I struggle with, and I'm sure billions of other people struggle with as well. And that's, I guess, a little form of digital intoxication, as in there's so much hitting us on a daily basis. I can't. I was every now and then I do a bit of time tracking because I just want to see which seconds of the day, which minutes of the day pass through my fingers unaccounted for, because I'm a bit anal like that. I'm all about optimization, and we have a finite life, so I don't want to waste our precious seconds, etc. And I realised we all have so many digital platforms, whether it's Facebook, Twitter, LinkedIn, Discord, Slack, email, just normal text messages, and it becomes a bit troublesome, really. And one of the things I see with most new business owners especially is that they try and do everything really shittily, if shittily is even a word. I think it should be from now on. Shittly, TM, Siam. So what happens is that you have a typical new biz owner, and they'll be on every single platform out there. They'll be expending far too much time, 8 hours a day on social media, etc. Obviously, I'm exaggerating here, and they never really get any traction. So if it's from let's say they're doing this for marketing purposes, they'll never really get anywhere, because every platform they'll have one follower. And so I've always been the believer, I forgot who said it, it's like Bananarama syndrome, so it's not what you do, it's how you do it. And I've always focused on being a bit more deep than shallow, if that's the right way to say it. I don't know. Where I prefer to really nail something, at least one thing or two things really, really well, and then either not do a whole bunch of other stuff. So for example, let's take business marketing. First of all, you need to know where your audience is, and so for some of my businesses it tends to be Facebook predominantly. So I've made it my mission to nail Facebook marketing, and so it's a positively campaigning marketing pillar, platform, etc., etc. So I managed to do that. It's been going hunky-dory for years. We're not spending too much. We're probably only spending about $3,000 a day on Facebook, which everything's relative. So I remember back in the day where if I had a $3,000 a month ad spend on Facebook, that was pushing the boat out a bit. But obviously, as businesses grow and stuff, all you're doing in business is, if you've got something that works, it's just a simple game of adding an extra zero and see how fast you can add extra zeros to stuff, other than the OPEX column. You don't want extra zeros in the OPEX. Sorry, I'm slurping around with my coffee here before it gets cold and miserable. Yeah, so Facebook marketing has done well for some of the businesses, but on the flip side, I've got friends who are absolutely nailing it on Google Ads, and they're like, "Simon, why don't you do Google Ads?" And because but the thing is, completely different businesses. So, for example, one of my best mates, a guy called Sam Hewitson, he runs Bearing Boys, and he's nailing it. You would have thought such a boring business model, selling ball bearings online. It's not. You don't wake up, or you don't ask. You don't see kids at school going, "What do you want to be when you grow up?" "I want to be a ball bearing salesperson," or business, etc. But a lot of my friends with very big businesses are very boring businesses, if that makes sense. So whether it's refuse collection, ball bearings, what else is there? There was some sort of data management thing, which sounded really boring when he was explaining it, and I said that, and he was like, "Yeah, it is." But normally, a lot of these overlooked markets are actually really profitable because no one's really doing much in them. And so you can actually really sort of spice things up. So for example, in the ball bearing industry, not many people have, or in his industry, not many people are doing, Google ads properly. They don't have a proper online like merchant website, etc. Whereas he's gone, right, screw this, I'm going to modernize this industry. I'm going to have a really good website. I'm going to get most of our sales via online, blah, blah, blah. And so guess what? He's got people sniffing around him to try and buy him, which is great. Maybe. So so coming back to Clubhouse. Yeah, so there's a long-winded intro about Clubhouse. When I saw Clubhouse and all the, the viral people go, hey, Clubhouse, I was like, oh dear Lord, not another one. It's like every year there's one thing that just goes nuts. But the reason I've joined this, because I'm an Android user, I don't like Apple products. And so I've literally just I just went online and bought a £200 iPhone from Amazon. So I guess, first of all, my first goal is, can I make £200 from Clubhouse just to get some cost neutral on this platform? But in terms of cognitive biases, sometimes you can be so stubborn where you completely miss out. And that's one of the things I constantly sort of ask myself, what am I being stubborn, in any walk of life, whether it's business, relationships, or whatever, what am I being stubborn with? So I guess a personal thing is like, my wife loves thriller crime dramas and horror movies. And they're all a bit samey in my opinion, so I'm not the biggest fan. I'm more into sci-fi and stuff like that. But then the other day, or it was probably the other month, I was like, all right, okay, I'm going to open my mind, and I'll engage in the next one. So we watched the Fall with was it Gillian Anderson, etc. And that's something which I never would have watched. We would have normally looked at that and gone, yeah, that's a you box set, and she would have done it herself. But we really liked it. And then we watched a whole bunch of other crime thriller stuff, and so sometimes it does help to be a bit more open-minded, even if you think you are an open-minded person, which I am. And so I realised the other day that one of I guess I became entrenched in social media biases, and I was like, oh, not another bloody thing. And so I was like, screw this, I'm going to try and grow. And in fact, it's one of my whappers, that really pushed me. So Cheryl, I don't know, let's see, is Cheryl here? Nope. But yeah, thank you. So she pushed me onto this. And then when I saw Elon on here, it was an instant buy. So yeah, so that's the thing. So you've got to be careful with your cognitive biases, and also be aware of fads. I mean, this could very easily be a fad, but I've been trying to get my head around it, and I think the best explanation I've seen so far is that this is Medium for podcasts. Again, if you don't know what Medium is, that's not going to help. I guess it's like a platform of live streaming podcasts. And so I think for me, I'm just scoping this out, and I'm curious to see how they're going to monetize it. I think if they start adding subscription fees to this, it's going to die pretty quickly. And I think this could just be another ad platform. Or not could, I think it's highly likely going to be another ad platform, just like Facebook, just like YouTube, etc. And in a world where we are just like every freaking thing is being censored at the moment, it's increasingly likely I'm going to be booted off Facebook at some point. For various reasons. But there are times where I try and run some ads on Facebook, and they'll just reject it. And so if you look at any of my ads, so for example, if you go to it's going to be hard that I can't share a screen, but a nifty trick or Facebook hack is that if you want to see if a company is doing Facebook ads, all you need to do is go to their Facebook profile, their Facebook page, as in their business page. So let's take The Realistic Trader. Okay, so if you go to Facebook, in fact I've got my desktop open right now, so I'm just going to click it so I can verbally direct you. And for those that know me, I'm not the best verbal person. I'm more of a visual person. I'm good at writing, I just can't talk. I just end up verbally farting. Okie dokie. So I'm looking at it says Siam kid dash the realistic trader. If you go scroll all the way to the bottom where it says page transparency, click see all. So I'm clicking it, and then there's a little sort of pop-up window pops up, and it says go to ad library. And if you click that, what it will show you is every advert that business is running right now, and any previous adverts. You can search by date or whatever. And so what's happened on Facebook is because of the bots and the censoring, in the old, the ad copy is getting really mundane and boring. So for example, the ad right now I'm running here, if those who are following, it says this month's beginner test drive group is now open. Slots for this 2-month free trial group will close on the 15th. And that is literally pretty much the only thing I can say without Facebook going, oh, you're like a dodgy, financial person or whatever. Whereas, go back 5 years ago, I could say all sorts of things. Obviously, I was never bullshitting or misleading anything, but you can ask simple questions. You can't really ask questions in Facebook ads these days. Like before, I could be like, "Are you bored? Would you like a new skill?" or something like that. But you can't do that. So it'll be interesting to see how the ad platform develops on Clubhouse. So that's that. And also, I guess with that Facebook hack, looking at their ad library, if you have any competitors that you're searching or looking at, you can see what ads they're running. Now, don't just go and blindly copy them, because if they're doing things properly, they're going to be split testing quite a lot, and also rapidly and iteratively. And the bonus of spending 2-3 grand a day is that we can iterate very fast. Like in a day, we can get X amount of unique page visitors, and we can see the opt-in rates, blah blah blah, so we can rapidly iterate. However, if you see an advert that's been running for a long time, let's say you're looking at a competitor and they've got an advert and they've been running it for a long time, then they're probably onto something. So don't just copy everything else. I mean, if you just go to Boris Johnson's page, you'll see that they ran like 500,000 adverts or something stupid like that in the run-up to him becoming PM. So that's my long-winded sort of opening in terms of cognitive biases. I've got a lot more. In fact, one story which some of you already know. You all heard. In fact, who's here? I know my trader students probably heard this. It's about my mum, in terms of a cognitive bias, and then we'll move on. So obviously, I've been in crypto for a long time. I started off as the biggest hater of crypto back in 2012. It's long story. I was actually a part. In fact, that's a completely separate story. But long story short, I've been talking about crypto for a long time, and then 2016, I was like, "Wait, let's get into crypto." And then we had the 2017, pump and dump, etc. And all this time, I've been asking my parents to say, "Hey, please, just put some of your own cash in crypto, just to buy and forget. Just plop it into just put it into Bitcoin and come back in 5 years." And guess what? They obviously ignored me, blah, blah, blah. And then last year, finally, my mum came to me and was like, "Okay, I want to put some money in crypto, Siam." And I was like, "Okay." What's finally triggered you? And basically one of her friends said, "Oh, you got to get into crypto." And so obviously she ignores her own son that makes a living through investing and trading, and then she listens to her friend, who I think is either a butcher or a hairdresser. I can't remember which friend it was. Anyway, I helped her, and we managed to get her 27 grand into Bitcoin, and I kept telling her, don't put more than you're willing to willing to lose, obviously, and only put money in that you can leave for 3 to 5 years. And so she said, "Yeah, it's fine. I got 20. It's my life savings." And anyway, so she put 27 grand in, and that was when Bitcoin was around $5,000, and nothing happened for like 9 months, and then she was getting antsy because literally nothing happened. She was still break even during that period, and after. So then she started texting me and calling me, trying to get her money out, and I was trying to be the best son I could be, and so my only port of call was I just ignored her for 2 months, which I just didn't reply, or if we did talk, and I was just trying to stall her as much as possible, and in the end she confronted me. I was like, "Look, honey, I know you're trying to help me, but I just want to get out of crypto. And I was like, oh no. So she got all her money back, she got out break even, and then literally a week later, Bitcoin did its thing. And so Bitcoin went from $5,000 to $40,000 in the space of an eye blink. So her £27,000 pounds would be well over £200,000 right now. So I guess this, in a way, is a form of a cognitive bias. But yeah, I don't want to. What is this? Yeah, 15 minutes. Okay, we've got plenty of time. I don't want to make this whole thing about cognitive biases. I really do want to get into the wealth generation. But just curious, before we go any further, because I could talk forever about wealth generation. Does anyone have any particular burning questions that I can help with? Again, I'm no Elon Musk, but in fact, scales. Oh, that's a really good thing we can talk about. Oh.
I think, Simon, it would be quite useful if you just introduce who you are, actually. So people here perhaps don't actually know who you are.
Oh, yeah, fair enough. Yeah, so really quickly, just check me out on YouTube, but I'm just a Norwich boy. I used to be an Air Force pilot. That was like 12 years ago. And then, yeah, I've been trading from the age of 18. So I've been trading for about 18 years? No, 16 years now. Oh shit, I'm 35. So I've been trading for 17 years. And yeah, so a trader, did really badly, then did all right. And I've got a bunch of businesses. So I've got a private equity company and we've got 9 companies. So yeah, that's why I can talk about wealth generation quite confidently, because I've done loads of things. So I've only been in business 10 years or so, but I promise you I've done more in 10 years than a lot of people have done, simply because I'm not saying this in a braggy way, but I genuinely am fearless in the business space. So for example, most people come up with, they'll have a fork in the road, a dilemma, and they're like, do I do this, do I do that? And I've got this filter which I run everything through. I've done it for years and years, to the point I can run it through this filter in like half a second these days. And it's, am I going to die or is someone else going to die? No. Am I going to get hurt, physically hurt, or is someone else going to get hurt? I mean, I don't care about your feelings, as in physically hurt. No. Am I breaking the law or is someone else breaking the law? No. Okay, well then freaking do it. Like, they're the 3 worst things that can happen. Breaking the law, getting hurt, or dying. Like, if this decision doesn't come anywhere near that result, then it's fine. Then you've got to do it. So I personally don't mind having. So do fail, learn, and pivot. That is literally my mantra. And I do fail, learn, and pivot as fast as I freaking can. And I guess that all comes from a marketing perspective, because when you're doing online marketing like ads and stuff, that's all you're doing. You're putting out a bunch of stuff, seeing what works, analysing all of the data, the conversion rates, the cost per leads, the cost per acquisitions, everything. And then you're simply going with what works. So I guess that's me in a nutshell. So there was a hand up, and I forgot, I didn't click it in time. So if you put your hand up, I'll click it. Someone had a question. In 3, 2, 1.
Hi, it's Kevin here.
Oh, hi Kevin.
Hi there. Hi everyone. I had a question in terms of just really getting your opinion.
Mm-hmm.
Is it worth buying Ether or Bitcoin now, or worth waiting for the price to drop a little bit further?
Oh man. It's $1 million question. So obviously, I have to just do the normal bollocks, as in I'm not a financial advisor. I can't give financial advice or investment advice. And this, hell, we're on Clubhouse. So the way I imagine this is we're all in the pub around a big table having a chat. So this is literally my pub opinion, if that makes sense. So my pub opinion on Ether is that we are getting incredibly close to the next iteration of Ether, as in 2.0, transitioning from proof of work to proof of stake properly. And so there's always a bit of a run up. So if you look at Cardano's mainnet, so that's ADA as the ticker, ADA. Cardano's mainnet is coming probably by the end of the month, imminently, basically Q1 for sure. And so there's been a massive rally in anticipation of that, and so you tend to see mini rallies in anticipation of stuff. And I think it comes back down to, buy the rumor, sell the news, typically. And so sometimes you get a really good announcement on something and the price crashes. And why is that? Well, it's because those that are in the know go, oh yeah, this big event's coming up, I'm going to buy in now. And then when then news comes out or the event comes out, guess what? Journalists who are always behind the scenes, no offense journalists, but you are always behind the scene, behind the curve. They'll go, oh yeah, Ethereum's just had a big thing and it's now live or whatever. And then there'll be all sorts of Ethereum or Ether articles. Joe Public goes, oh okay, better buy. But guess what? That extra liquidity coming into the market is just a prime way of people that are already in to get out. Because obviously if you need to sell something, you need someone to buy on the other side. And that's effectively the crypto market as a whole. You've got to be shitting me. There's a delivery at the door. I'm literally just going to ignore it.
Another question.
Oh yeah, I will come back to Kevin's. I haven't answered it just yet. But yeah, go for it, Adam.
Just a question. There's a couple of people that come in the room that are what you describe as diehard Tesla hodlers.
Hey.
And you're a trader.
Yeah.
And Tesla's behaving a little bit like cryptos in some ways. It certainly has during 2020. It seems to be a little bit this year. What's your sort of take on that for a sort of long-term hold as opposed to trading it?
Okay, so I'm just going to finish off. I'll come straight back to that. So for Kevin's question first was Ether in or out now. My default answer is context is everything. Context literally is everything, and that's something which people completely ignore. So if you have money which you are going to park and leave it there for 3 to 5 years, then hell, get in now. Don't bother dicking about with trading and trying to get into trying to time it right. If that is your context and you're in this for the long run and you generally believe crypto is going to do crazy things and that Ether is going to be effectively the platform of choice, then yeah, get in now. And then sit on it, forget it, don't look at TradingView, don't look at the prices because you'll just get scared out. And normally with crypto, there's going to be 1,000,001 tree shakes. That's what happens when a big bank who's late to the party goes, "Ah, shit! I quickly need to get $100 million worth of Ether and Bitcoin." What are they going to do? They're going to manipulate and create their own little tree shake to shake us small, weak hands out, and they buy in on the cheap. So yeah, if that is your context, definitely. If you're a trader like me, it's looking slightly overextended right now. Slightly. I mean, we've just had a bit of a consolidation over the last month or so, and it's suddenly just pumped up. And there's a thing called Kobo, which my traders will know about, where basically when we have a breakout, the market typically will pull back to kiss off the level that it's just broken and then bugger off. So Kobo is kiss off, bugger off. So the trader in me thinks, yeah, we're probably going to get pulled back from, I mean, it's what, 1635 right now. It'll probably pull back to 1400 and then probably carry on going. However, the other part of me also thinks that when the global equity market finally does tumble and crash, which I'm 90% confident it will this year, everything will crash with it, cryptos included, temporarily of course. So that's Kevin's question. Sorry, obviously it's just my opinion. For full disclaimer, I've got I need to open my wallet, but I've got something like $120,000 in Ether right now. I've got about another $120,000 in Aave, which has done nuts. In fact, I'm just looking at the chart right there. But yeah, so all in all, I've probably got about $300,000 in crypto right now. So I do have skin in the game. And when I look at the Aave chart right now, that's AAVE. It's giving me shivers down my spine because I got in at 120 and it's now 450, and the chart is vertical pretty much. It looks like GameStop. So part of me really wants to pull out of that. So yeah, now going back to Adam's question, which is a Tesla thing, because I am a Tesla diehard fan.
It's about cognitive biases. That's where to try and bring the two together.
Oh yeah, man, it's good having you here. That's smooth. I like that. You're like the Siam DJ right now, blending it in question by question.
Thank you, man.
Yeah, so because I am a diehard Elon, Tesla, everything Elon fan, I have immense belief and confidence in him and his track record. I mean, typically, because I like studying people, and people with a track record will tend to extenuate their previous track record, if that makes sense. So if you have a person that tends to do things, that tends to say things and then follows through on the things that they say they'll do, it's almost like a habit. It's like a success habit. Now Elon is the epitome of that success habit type person. When he says he's going to do something, he does. He may be a little bit late. That's Elon time, as they call it. But yeah, so for me, again, it goes back to context. Are you in this for the long run? If so, don't dick around with the price. But having said that, I'm sort of sitting on the fence here because, again, being completely open, I haven't got much in Tesla. I got in. I put £25,000 sterling at Tesla. In fact, let's open the Tesla. I've got it here on the chart. I got in at $420, which coincidentally is a number that Elon likes. And I got in literally a week before it rallied. So it went from 420 up to 855, where it is now, roughly. And however, I exited at 820 because it just got slightly too extended for my personal liking. So if I was to listen to my own advice, I should be like, Siam, stop being an idiot, just get back into Tesla, and then just forget it. However, those that know me also knows that I'm obsessed with seesaws. Investing seesaws. So please have a look at my YouTube videos because I talk about it. But basically, every decision that you make in life, whether it's the food that you're going to eat next or whatever, it's a seesaw. It is literally, and normally the seesaw has effort on one side. It's normally like, I want to change the TV program, but the remote is 2 meters away. And so that is a seesaw in itself. Can I be asked to get out of my really comfy position to lean over and grab the remote? And is the reward worth it? Is there something else better than the comfort I'm in right now? That's a silly example of a seesaw. But the other seesaw that I'm also considering right now is that Tesla's had a bit of a run up. When stocks, okay, I'm going to be more concise. The seesaw I'm eyeing up right now is: do I take that cash, I think like almost, the 100% profit? There's like £30,000 profit that Tesla's made. Do I take that right now because it's sat in cash right now and put it into crypto? So that is the seesaw I'm actually considering right now. Is Tesla going to rally harder and faster than in crypto? Now, my opinion is that no, it won't. I think my opinion is that crypto is going to rally harder and faster than Tesla will. And so that seesaw, I guess it's just a ratio play. And when I say a ratio play, it's a case of, right, exit Tesla right now, take that cash, put it into crypto. If obviously there's lots of ifs here, if crypto does its thing, I'll make surplus profits, and then I can take that extra profit and then plonk it back into Tesla. So that's the seesaw I'm weighing up right now.
Sounds like a brilliant idea to me. It all depends which crypto you go for, doesn't it?
Yeah, is that Connor speaking?
Yeah.
Ah, cool.
Can you hear me alright?
Yeah, so I just looked at your picture. You are ripped, my friend.
Yeah, I do try.
Yeah, I did exercise about 12 years ago. That's probably the last time I did some exercise. I'm feeling...
I'm slacking at the moment because the gyms are closed here.
Ah, yeah, true. It's ironic. Yeah. I've just set up in my house a dojo library. So we have a library in one of the rooms, and so I've decked it out with full of like blue mats and a massive like freestanding punch bag. And it cost me about £600 to kit out that room. I've used that room 2 or 3 times. So I'm feeling really, really sad right now.
Not getting your money's worth there.
No. Sorry, Connor, I interrupted. What's your question, mate?
Yeah, it all depends which cryptos you go for. So have you got any cryptos in particular you got your eye on?
Yes. Again, I have to be very careful with, the... how can I say it? What I'll do... In fact, okay, I'm going to say this. It isn't there right now, but a while ago, I released a video to my students, my trading students, of which cryptos my portfolio is in right now. And I think it's a fair amount of time afterwards, because the thing is, I don't want to get in trouble with the FCA, basically, by illegally promoting stuff like that. But I think enough is, in fact, the price points have definitely moved a lot since I've gone in. So later today, what I'll do is I'll post that video on my YouTube channel, and you can then see what I'm in. But I can, because there's quite a lot. I've probably got about 20 different cryptos, but 70 to, in fact, 1 second, see if I can find my last doodles, because I make a lot of doodles, and I'm trying to, damn it, no, I can't find it. Oh yeah, found it. Stand by. It's just loading. I'm using Microsoft Whiteboard, and it's taking its merry damn time. But off the top of my head, I've got 35% of my portfolio in Ether, 35% in Aave. Here it is. I've got 5% in privacy coins, so that's Monero and Zcash, or Zcash as they say in the States. The thing with privacy coins is that eventually, this year is going to be the year where they start demonizing physical cash and saying, oh, it's a virus spreader and only drug lords and criminals use cash. And they'll start doing that the moment the central banks do a coordinated CBDC push. And a CBDC is a central bank digital currency. So it's basically a crypto currency. So the Bank of England will be launching digital sterling, the ECB digital euro, and it will be a coordinated push. And so when that campaign starts, we'll see the demonizing of cash. And the moment we are in a digital currency, there is no escape. They'll see everything. And so you can't hide in cash. And that is when I think privacy coins are going to hit the roof. I've only got 5% in there at the moment because it's only 2 coins. I've got 12.5% in punts, which the video will show you, and then I've got 12.5% in what I call the Kryptonian portfolio, your own sort of tracker fund. Now, the reason being is that none of us, not a single person here or anywhere, knows which crypto are going to go to the moon with certainty at all. All we can do is look at our investing seesaws and then balance the different probabilities of what may happen. Again, may in caps locks there. And so the reason I have this Kryptonian portfolio is that you effectively end up spreading your load across the whole board, if that makes sense. So if you go to, let's find it, it's Messari.io, so MESSARI.io. So if you then go to that, and then if you click Screener, what you'll then see is a big old list of crypto, and then on the right hand side there's sector. And so if you just alphabetize that, so I'm doing that right now, you'll see that there's a whole bunch of advertising crypto coins, AI, application development, asset management. So basically it's every different genre of crypto there is, just like in the stock market. You have pharma stocks, tech stocks, bank stocks, etc. So my Kryptonian portfolio is basically buy the biggest one, the biggest crypto, or the top 2 biggest cryptos in each niche that you wish to play with. So for example, if I'm just going to scroll down here for a moment and find a relatively smaller one, because there's loads of currency ones. Let's look at data management. Okay. So in here we can see the top dog in the data management world is Chainlink, and lo and behold, I have Chainlink. And the second, because it's got $9.7 billion in market cap. The next one is $1 billion. That's the Graph. I've got the Graph as well. And then I haven't really bothered with the others. And then it looks like I've moved on. In terms of decentralized exchanges, the big dog there is Uniswap. Yep, I've got that. I don't have Sushi, but I've got Loopring, which is another one. So yeah, and that way you are guaranteeing that you have your finger in every crypto pot or pie. So one day if you look at the news or whatever and goes, oh, X whatever coin or has gone to the moon, you'll know that you most likely got it. Let's say privacy coins shoots to the moon, then you know that you've got it. So does that make sense, Connor?
Yeah, that makes sense. Sounds good. I was wondering, do you have anywhere that you get interest on your crypto, or do you store yours on a ledger?
No. No. So Okay, so I don't keep up to date with crypto news. I call it. I think there's a video on my YouTube channel. I said stop being a crypto dog. And the thing is you become. It's a full-time job. You simply cannot keep up with everything because you'll be constantly reading up on just everything, and you'll be, falling behind in other parts of your life, like your work or whatever. And so what I tend to do, that's the reason why I guess I've stuck to pretty solid. The bulk of my things in solid plays. That 12.5% I have in a few punts, ones which I think could 10x pretty quickly. But again, they are punts. I mean, for example, the last big punt I took was Tron back in 2017, because Tron was at 3.5 cents, and I put $50,000 into Tron, and then it mooned, and I got out at it went all the way up to something like 33, and it went nuts, and then I got out at 21 cents. So that was great. A lot of people think I bombed out on that one, but I didn't. It was only because I got in at 3.5 cents.
I like how you're like me, how you're from the UK, but you're talking dollars. That was yes, people.
Yeah. So yeah, that's that. Are there any other questions? Went off on a bit of a crypto thing. Let's try and get. Hi, Carl.
Siam, hi.
Oh, hey, mate.
How are you? You're right. Good to see you on here. I've been following your work for a little while now.
Hey.
And yeah, it's I'm not actually active in trading or anything like that. My question is more about the fundamentals and the basics, because it's something that has interested me for quite a long time.
Cool.
And I haven't. I mean, I'm fully immersed in the world of Amazon at the moment. That's what I do for a living.
Yep.
And I've been sort of trying to. I mean, I've been in e-commerce for as long as I can remember, but specifically Amazon for the last year and a half.
Yep.
And I've got an enormous amount of work in that space in terms of sort of trying to build up some capital to do something fun and exciting with it long term.
Yeah.
But is there any tools or things that you would recommend for someone like myself to sort of really fully immerse themselves in the fundamentals of trading? Not necessarily crypto specific, because I think that's another step up the ladder. But something to kind of really get a good grounding in the fundamentals of trading, so that I can get, I'll probably spend 6 to 12 months really swatting up on the whole thing and maybe practicing on, some sort of non-live trading accounts, just to really sort of get stuck into it.
Yeah.
I'm quite a sort of data-driven person anyway. That's the attraction of e-com and the research and stuff that I do there. But
okay.
I think I could really kind of move sideways longer term into this kind of niche.
Okay, I've got a bit of an answer which you're not probably expecting. In terms of trading, I utterly urge you not to do fundamental analysis and then place trades. I cannot stress this enough. If I look back at every big loser I've had over the last 5 years, hell, over the last 2 years, and I've had a lot, they nearly all stem back to me having a fundamental analysis view on the market and then trying to execute it via somewhat of a short-term, medium-term trade. Now, the reason, and that's just me being pig-headed, and I knew I was making that error as I was making it, but I was just being stubborn, going, no, actually, no, I know better than the charts. So here's the thing: time frame is everything with trading and investing. Now, in my view, you are an investor, or you have placed an investment if something lasts for more than 6 months. So if you're going into something with over a 6-month time frame, then really that's an investment. If you're doing anything less than that, then it's a trade. Now, the reason why you shouldn't look at fundamental analysis for your trading is because it means jack shit in the short term. It really does. I've shown this so many times to my students, and also on YouTube in some of the videos where people are expecting good news. I'm just trying to think of the last one. I think it was a UK announcement. Yeah, that was it. So this was last year. I think sort of May. May. We just had the shit show of the COVID crash and all that sort of stuff. And then there was a massive report coming out by the Bank of England saying UK GDP has plummeted and it's absolutely rock bottom and it's the worst Q1 we've ever had, or something like that. What do you think the FTSE did? Now, the average, a bit of a rhetorical question, the average Joe or the average person would have gone, oh, that's a really bad sign, bad earnings, yada yada yada, let's short the FTSE. Whereas the FTSE rallied. It rallied hard on the worst Q1 announcement ever of UK GDP. And a lot of people got burned. And a lot of people would be like, well, why is it rallying? Where? And then most people then go to Google and go, why is the FTSE rallying? And then they all end up on some Reddit thread or whatever. But the way that the market works is that let's just call it the big boys, okay? And the big boys is everyone from banks to hedge funds to pension funds to billionaires. So that's what I mean by the big boys. So what happens is everyone knows that GDP is falling, and so they would have had all sorts of horrific numbers, etc. And then when the bad news comes out, and let's say, oh, GDP's dropped by 25% or whatever, all the big boys go, oh, that's actually not too bad. We were expecting it to crash by 50%. And so the announced news isn't as bad. Obviously, it's horrendous, but it's not as bad as they thought. And so guess what? Things rally. And this happens time and time again. So if you're trading and your trades are going to last less than a month, most trade, if you're trading like how we do, most trades last a few days to maybe a week or two. Don't do fundamental analysis. You need that for investing. So I use fundamental analysis for business and crypto, but not for my trading. Now, in terms of a resource, how you can really get stuck in, there's two things. The first thing is read every book by Jim Rickards. So the first book, which is mandatory reading or listening, I listen to it on Audible, is Currency Wars, his first book. And that is like going down the rabbit hole. And then read the sequel to that, etc., etc.
Sorry, it was Jim Rickards, did you say?
Yeah, Jim Rickards, Currency Wars. That will blow your mind. Also, if you want to get in on the fundamental side, and this is, it's not a shameless plug because it is genuine. If you go to therealistictrader.com and look at the free trial, you get like a 2-month free trial. There's 4 sections in it. The first section is all about world economics, but in explained in simple English and the whole fundamentals of stuff. So yeah, it's worth jumping on that. But yeah, any other questions before? Yeah, no worries. In fact, before we have another question, I just want to talk about scales. Yeah, because I've created a list. I mean, we've been here for 42 minutes now, and I don't know if people are getting bored or not. But I think a scale, scales is important. So there is a scale for everything, and I was chatting with Adam about this, and in fact some of the whappers not long ago, and how that it's really, really easy to become very good at something with a very short amount of effort spent. Okay, now I wish I had my doodle pad here to visually show you, so I'm going to have to use numbers. So if we had a straight line across the page, and on the left hand side we had 0, and on the right hand side we had 100. Okay, now let's take advanced theoretical physics, quantum mechanics. Let's just use quantum mechanics. Okay, now the whole, in terms of people's ability and knowledge base in quantum mechanics, it's going to be a bit of in fact with everything it will be a Gaussian distribution, so it'll be like a big old bell curve. But most people and most people will, their knowledge base in fact quantum mechanics is not that good because pretty much no one knows anything about quantum mechanics. Let's just talk about electronics. Okay, it's pretty broad. Electronics. So the average Joe doesn't know much about electronics, and so if you were to put that Gaussian distribution, the masses, so the majority of people will probably be, I don't know, 15 to 30 on that scale. Obviously you have some that are 0, and then you have Elon Musk, who's up there at 100 actually, or probably 90, and you have MIT whiz kids who are touching 100. So that's the scale. However, I would easily say that I was probably 15 or 10. I'm not a DIY person, etc. But last year I quickly got into the hobby of FPV droning, so first person view. So you wear a goggles on your face, and then you fly a drone around your garden, whatever, and you see everything out of the camera. Now, I got in there because I saw some flashy videos on YouTube of people, flying between tiny holes and through the woods, and I was like, oh wow, that's awesome. Little did I know that it would then quickly consume all of my free time in the summer. Because what happens when it breaks, which it does, you then end up with like a 200-300 pound quad, as in quadcopter, which is broken. And then you have to fix it, because you can't get anyone to fix it. And so very quickly, I ended up consuming a lot of YouTube videos about electronics, how to solder, how to heat shrink stuff, how to reflash the ESCs. There's all sorts of like minor electronic stuff. But in a very short period of time, like in a month or two, I got actually very good at electronics for quads. Obviously very, very niched there. And a few other bits and bobs. And so this scale is very important. So if you look at me in business, okay, so I'm more than happy to lift my skirt up. So in business, on that scale, we have someone that has never run a business ever and never will. They're probably at 0 on that scale. And on the far side, you have the richest person on the planet, Elon Musk, who in my opinion is probably the best business owner that's ever been there. I mean, people look at, Steve Jobs and he's like, oh, Steve Jobs is amazing. But he only did 2 publicly listed companies, and obviously Apple was a big issue, big thing, and Pixar was pretty freaking good. But like when you look at what Elon has done, is doing, and is very likely to do, I mean, Elon is just on another level. So that's the spectrum. Now, where would I put myself on, or where would I put that normal Gaussian distribution on that spectrum? I would say most people would probably sit around, again, 10, 15, 20, so right at the bottom end. And here's the thing, you don't need to be in the 90s, the upper 90s. You really don't. You don't even need to be in the 50s. If you can get yourself to the 40s and 50s, you're going to change your life irrecoverably, but in a nice way, if that makes sense. I'm sure there's a better word than that. You will change your life forever. So when I put myself on that business scale, I'm not an idiot. You don't know what you don't know, but your bank balance is pretty much the only indicator that will tell you how good you are at business. I mean, everything is a game at the end of the day, and I'm a gamer. I literally treat everything like a game, and when I fail, the reason I have do, fail, learn, pivot is because I'm a gamer. And what happens when you die on a level? You hit reset, retry, and then you redo that level 120 times until you get to the next level. That's what gamers do. Failing is not an option. It's just a time setback. That is all. It's just a time penalty. That's all it is. And so, on that business scale, I would put myself between 40 and 50, literally. And I've in the last 10 years, I've bought at least 15 different businesses. I've got 9 companies at the moment. I've done all sorts of stuff. I've done a lot, but I would only put myself about the 40 and 50. But then you have lots of different niches. So I have 0 clue about enterprise business. So when I say enterprise, that's big Billy Big Balls businesses, if that makes sense. Whereas what I'm very good at, and what I'm very comfortable in, is I can take a startup from £0, 0 product, 0, just complete 0, to at least 250 grand a year profit very quickly. And that's now it's our bread and butter. It's really easy. I mean, going from 0 to 250 grand profit a year is the easy bit. It then gets harder when you then start scaling and then have staff, and then it becomes an absolute ball ache when you get staff. And so I set myself up there on purpose, because I look at everything logically and I try and take the most direct route to things. And I thought, well, I don't actually need to run a FTSE 250 company. I don't need to have a business that's doing £20 million revenue a year or whatever. All I wanted was a bit of diversity. So I literally said to myself 10 years ago, I'm just going to set up 10 businesses and have a bunch of businesses that all chuck out, modest amounts of profit. And thankfully, and I know you're not really supposed to say this, but I actually had a very, very comfortable 2020 in a year where most people are basically scraping the barrel, and that is simply because of the wide range of businesses I had. So I had a whole bunch of businesses that did utterly dreadfully, just bleeding money on every single day, and I had some businesses that were booming, and then a whole bunch of businesses that were just break even or not break even, as in just treading water, just being completely average. So yeah, so you don't need. So I actually think Elon Musk is a very bad role model to have in business, because people look at Elon Musk and go, oh, he's a gamer and he spends time gaming and he's on Twitter all the time, and so people emulate all of the stuff that I guess that they feel comfy with. But what they don't forget, or what they don't realise, is, you know, what about the 40 years of business or the 35 hard years of business he's done in order to get in the position where he can dick around and create flamethrowers and stuff like that, or flamethrower, not a flamethrower. So he's actually a very bad business role model, because he's doing lots of different things. A better role model would be is to find someone who is literally only 5x or 10x from where you are. And I've said this so many times, but it's so true. Find someone only 5x or 10x from where you are, because the trials and tribulations that you're about to enter, they have already just walked through them and accomplished them and got round them. So as Jim Rohn says, don't wish that life was easier, wish that you were better. So, and I guess the business analogy from that is like, if you had better problem solving skills, you'll end up with a bigger, better business. And so let's put it into monetary terms. If you're a new startup, so with zero revenue, or hell, you've got 500 quid a month revenue coming in, don't look for someone like a Dragon's Den. It's not going to help you. You need to find someone with a business that's making 5, 10, 20 grand a month profit. Okay, ignore revenue. Revenue is such a vanity term, and I still see pretenders online going, hey, I've made millions of sales, blah blah blah. But I'm like, yeah, well, what's the profit? Like, anyone can do that with a 1% business net margin. I used to be a bullion dealer, and my net margin was 1.4%. 1.4%. Whereas look at my revenue, I was doing £2 million a year just from Facebook. But it was a dreadful business, because it was a 1.4 net. So I was earning less than minimum wage with that. So the scales, you don't need to be there. Like, you really don't need to be in the high 80s, 70s, etc. Just get yourself to, in the 40s and 50s, and you're going to be absolutely booming it. And then just do review apply. I mean, for example, Adam here, we've I haven't played Age of Empires, the game, for a long time, and in fact, hey, Harry's in that group as well. I'm just looking at who's in this list at the moment. And we've created geek clubs. There's about 10 of us now, and every night we play Age of Empires 2. And the thing is, here's a bit of shit banter here. I'm absolutely dicking all over Adam and Harry and everyone else in the group at the moment. Do you like my weird flex, Adam?
Yeah.
I'm dominating. But the thing is, I'm nothing special. Like, if you put me against a pro, I would get absolutely demolished. But the thing is, I've just done an extra 20, 30 hours of gaming in that particular game, of dedicated learning, than anyone else. That's it. And all you need to do these days is spend 10 to 20 hours of focused learning on something, and you will be better than 99% of the population. I promise you. Pick the most obscure thing. I don't know, spot welding. I don't know. Just do 10 hours of YouTubing and learning about welding, and you'll know more than the population. And that's enough to really separate you from stuff. But I will never be a pro at anything. I will simply just be better than the general public at everything that I do, but shit compared to actual experts in whatever that niche is. But I lead a happy life. Yeah. So, yeah, Adam, go for it.
I think what you're saying with the scales is absolutely spot on. It works when there's not an industry where there's a ton of misinformation and or disinformation out there. Then it works, absolutely. I get this with the sort of stuff that I do. It's not a plug, but I just talk about food. That's what I do. And if I say to somebody, okay, you're struggling with XYZ problem, maybe a weight problem, when's the last time you interrogated your own belief system around food and spent 10 hours learning around food?
Exactly.
The answer is usually never. So we'll go off and do that and then see if it works. And then the second point you made there is not to try to to shoot somebody 100 levels above where you are, maybe a couple levels. A lot of people come to me because I'm just in pretty good shape for what I am, for example. Whereas that chap Connor, who was here, I don't know if Connor's still here, looked absolutely amazing, but it's going to be unobtainable for the vast amount of people.
Yeah.
It's just too many levels above to get to that.
True. And he's put a lot more hours in than anyone else has.
Exactly.
So, yeah, that's absolutely crucial. So, yeah, completely spot on. So, I've just realised we're 55 minutes in and I haven't really actually talked about the wealth generation stuff, the brutal truth. So I'm going to quickly talk about that now. The brutal truth that I really want to talk about with wealth generation is that if you are someone who likes being comfortable, then business and wealth gen is not for you. And I say that like with somewhat of authority because I know of so many people, so many close friends and family who I would say are, and I love them to bits. And I, by the way, what I'm about to say, I've said to their very face. They are entrepreneurs, but they're not willing to put in the time or whatever it takes to make it work. So one of my old Air Force friends, for the last 5 years, he's been saying, "Oh, I'm going to get into business. I really am going to get into business." But that's all he's been doing for the last 5 years. He's been saying he's going to get into business, and and he hasn't set anything up yet. And the reason being, he's too. So one, there's a fear element. So he's too fearful of losing, or losing a bit of money, etc. And the other thing, he's too comfy. So he's in a golden sort of prison at the moment, where he's an airline pilot. And he's on probably 50 grand a year. Luckily, he hasn't lost his job yet, whereas lots of other airline pilot friends I have. And so he doesn't do much work with his airline job at the moment, and he's getting relatively well paid. And so the risk for him is that, does he leave this cushy job for a complete unknown? And for most people, obviously, yeah, you shouldn't. I mean, age is a good thing here. So if this person, he's not. I mean, this person is 36 years old. So I'm like, dude, just effing do it. You got nothing to lose. However, if it is like a 60-year-old or a 70-year-old or whatever, then all of a sudden that seesaw, that risk-reward seesaw, is less appealing. But hell, if you're in your 50s, I mean, I would say even if in your 60s, it's still probably worth doing. Because you can change your life forever in a very short period of time, like within 5 years easily, within 5 to 10 for sure if you do things properly. But the brutal truth is that most people won't understand straight away the hardships. So you will have a massive increase. So let's look at another seesaw, the risk reward of business. So the reward is the money, obviously. That's all everyone focuses on, the money and the status and all whatever. But let's look at the flip side, which no one looks at, or none of these gurus online talk about. So flip side is stress, the unbelievable amounts of stress that you'll have. I'm 35 years old and I've got grey hair, and embarrassingly, I looked in the mirror the other day, I had a grey nostril hair. I was like, what? I shouldn't have grey hair. But yeah, that's mainly trading and business really that's caused that stress. So, and as a result of business, you'll lose friends. You'll lose very close friendships. You will become extricated from your family, your close friends and family as well. Because you'll start growing into a completely different person, and you'll morph into someone that they probably don't feel familiar with anymore. It's like you're a caterpillar, and caterpillars, when they get into their chrysalis, they actually sort of dissolve. They literally become a completely new life form. And then what exits eventually, after being dissolved, is a beautiful creature that can do things that caterpillars can't, i.e. it can fly. And so, yeah, so you lose friends and family, you get loads of stress, you'll forever have short-term cash flow issues. Or hell, maybe even long-term cash flow issues. But cash flow issues, full stop, is something that will never disappear. Even Elon Musk has cash flow issues, except he has lots of extra zeros compared to you and I. But you'll still have them. Everything is relative. You will lose health. You can try and balance health and business, and yeah, some people do it well, and good on for you. If you can do that. I'm not one of those people. I'm lucky that I have Asian genes. I'm half Asian, so I don't get fat, which is I think I've got a mini superpower because I eat so much junk food, it's ridiculous. But I'm pretty sure inside I probably have the heart of a 60-year-old. I can't run up and down these stairs without being out of breath. So what else? What other hardships? So losing friends. You will lose money. That's guaranteed. 100% guaranteed. You will lose money. You'll spend endless amounts of time sorting out the freaking home printer. Bloody printer won't work. And other tech issues like that. You won't get as much done every day that you think you will. You'll always feel like you're a failure. Always. Even when you do things well, you'll still feel like a failure. You won't celebrate as much as you should. You will have imposter syndrome all the time. All the freaking time. I have that. Everyone does. Especially, like, I remember the very first time I set up a business. I'd never done it before, and I was selling a product, and I felt like such a fraud. And not because the product was shit. The product was great, but I felt like, oh my god, does this person know that I've never been in business before? And like, you don't know what pricing you should ask for. It's like, well, is this too extreme? Can I charge this much or too little? And obviously everyone ends up pricing themselves way too low, which isn't necessarily a bad thing. I mean, the good thing is that when you're first starting out, it is worth massively underpricing. Hell, charge cost price just so you can get your first dozen clients in, and then use those dozens of the first dozen clients to get brutal, honest feedback and how you can improve, yada yada yada, and get testimonials, and then just work your way up from there. Are there any other drawbacks that I forgot about being a business owner? I think that's pretty much it.
There is an expression, which is just going back to what you were talking about. Is this for you? And it's quite a brutal one. I don't know if it's politically correct or not, but it's like middle class trap.
Yeah, it is. It's the golden handcuffs.
Which is not bold enough to get rich and not poor enough to be fearless. I think it's that.
Exactly. It's so true. And my biggest tip to get out of that handcuff thing, I made a video about it, is that you have to ask yourself a series of questions. In fact, I should have prepared a bit better and had that list of questions up there, because you need to ask yourself, over the next 10 years, do you want to take home more than £7,000 per month? So that is the first sort of filter question. Do you want to take? So obviously everyone is like, yeah, of course I want to take home £7,000 a month or whatever. But do you genuinely really want to? Now the reason I haven't plucked that out my arse. That figure I think is £150,000 salary, because you are then taxed up the yin yang. And so I think off the top of my head, with 150k salary, you only take home £7,000 a month. Now the reason I've used £750,000 sterling salary per year is that if you have that salary, you are in the 0.001% of the UK earners, and there's very few people that earn that amount. And so if the answer is yes, you do want that sort of salary, or £7,000 a month to take home or more, then it's absolutely futile by continuing in a job. Okay, I'm not job shaming at all or job knocking, whatever. Jobs are absolutely essential. It's the first stepping stone on your wealth generation journey. But you have to have an honest chat with yourself. I mean, I was an Air Force pilot, had a cushy job, I was living the dream, and then I had an honest chat with myself and went, oh shit. Like, I looked at the group captain who was giving, some of you know the story, I'll just repeat it, but every year the pilot, the station commander, who's normally a group captain, would get the junior pilots in a room and give them a little pep talk and go, oh, and I was at the back on one of these pep talks, bored out of my mind. And then I asked my mate, I was like, mate, how much is the station? And that's in the station commander, and a few of us were inquiring, and then we all came to the assumption that he was on about £80,000 a year salary, 80 to 90 or something like that. I'm probably wrong. I mean, this was like 12 years ago. And we realised that, it was about 80, 90 back then. And I was like, oh my God. And this was when I first started to really want more to life than that. And I was like, so I've got to work another 20 odd years in the Air Force to get to £80,000 a month. and it's only potential. There's no guarantee you'll get to group captain or station commander or whatever. And I was like, wow, okay, this is crazy. I'm never going to get there. It's such a time inefficiency doing it that way. And so in business, if you want more than $7,000 a month take home, you absolutely have to become a business owner. You have to. You absolutely have to. So you see all these courses out there. So like, hey, become a trader. Hey, become a property expert. Hey, become a crypto expert. Hey, become a Amazon or podcaster. Like, there's all sorts of fads out there in this wealth scene at the moment. And every sort of person will say, hey, their method is the only way to get rich. Well, it's utter bullshit. It's pure poppycock. I mean, hell, I'm a trader, and I'm telling you right now, trading is not the way to get rich. It's an arrow in your quiver. That's all it is. It's not a single bullet. And I would say if there is a single bullet to wealth, it's becoming a business owner. Sorry. And what you'll find is that most people that make property profits, etc., and flipping houses or whatever, they are a business owner. Property is simply the widget that they use in their business. There's no different than selling oranges or whatever. So that's the first filter question. Do you want $7,000 a month? If it's yes, then being in a job is completely incongruent. But don't quit your job straight away. Okay, so that's what I did, and it was very foolish because I was almost bankrupt very soon after leaving the Air Force because I was trying to become a full-time trader and business owner, and then I lost everything, and I was close to the line. So that wasn't wise. So you should use your job as a simple side. As like a stepping stone, okay? But then it's like, I'm trying to be more concise because we've been here an hour, and I could literally talk for hours about this. Any questions so far before I go into the next thing? I see there's Lily. Did you have a question, Lily?
Well, I was just sort of inspired by what you said, and I did have a question, but I think we're sort of moved on, but at the same time, come back to me, okay? Because I'm listening to your side. I'm listening.
Sweet. I've just seen your profile. You're an ENTJ. It's weird. I used to be an ENTJ as well. I'm now an INTJ, which is weird.
I used to be an INTJ, and now I'm an ENTJ.
That's crazy.
I think when I was younger, I was definitely more introverted.
Yeah.
But yeah. It's funny how I think it flips, and you know what? It flips particularly around the environment that you're in and the people who are in that environment.
So
and that
true.
Changes it.
So true. Yeah. Is Harry still here? Harry? No, he's gone. So Harry, I went through officers training with Harry. We're in the same intake, so we've gone through a lot together. And yeah, environment is so true. So like going through the Air Force, like military training stuff, you do become more of an E than an I. But since becoming a civvy and then sitting in my desk all day, every day, I've become more of an introvert. It's weird. Anyway, but yeah, if you have your question, just pop your hand up. Likewise, anyone here, if anyone has a question, please just pop your hand up. I'm trying not to make this the me show. I'm happy to answer questions and stuff.
Well, I could actually, but
go for it.
I'll just pop in then.
Yeah, do it.
Basically, I love business. I've loved doing business and the grind, and I've been sort of having side hustles since I was 13. I did the whole cake bake sale thing, did the whole mural painting thing, cleaned for my neighbours, employed someone else to do that when I was 15. I had a mini business going during my teens.
Cool.
My friends thought I was really, really freaking weird, but I loved it, and I didn't actually care at the time. But that kind of began to change at about 17. And because of my home life, I spent a lot of time outdoors, and I started to notice how bad the town was, and it actually gave me a life purpose. So I set about so I had a dream to like buy my hometown and other rundown towns and rebuild and redevelop it to simply make it better for everyone, but also I just think it would help bring in money, essentially.
Yeah.
So I wanted to So all of my friends were essentially, I would call them socialists, so I'm definitely a capitalist.
Yeah.
Because I believe in the power of business to actually change people's lives.
Yeah, it does.
So I came from a family that didn't really know about architecture or developing, and I chose to do architecture to eventually become a developer, which was actually the wrong thing to do. I probably should have just started developing, but I didn't have any contacts being in that area.
Yeah.
So I quickly found out I'm not like any other architects. I'm definitely more of a hustler, and I'm definitely, I'm definitely more of a go-getter. So right now, I'm pretty much an award-winning graduate, and I've spent tons of time, getting, excellent. I was literally awarded, I'm literally the highest grades in my years at uni every single year, and I find it freaking hilarious because I come out and I'm an award-winning architecture graduate, and I'm still thinking, you know what? I hated REBA architectural education because it never taught its students to hustle, basically, and
uni doesn't.
It's shite, and quite honestly, the brutal truth for me is that I would have not gone to university. I think real life skills that you really need cannot be taught at university, and for me that's
Agreed.
My brutal truth.
Yeah.
Exactly.
It's
sorry.
Yeah, no, sorry. I've got really bad internet here, so I think there was a lag. But yeah, I completely agree. And I guess one thing on from that is MBAs. So as in the business degree. It's ironic. One of my businesses is a company which is Ofsted regulated. It took three hard years to get Ofsted regulated. We're ESFA funded, blah blah blah. And what this company does management training degrees like ILM, CMA, level 3, 5, 7, etc. And one of them is MBAs. Now, this is probably the one thing in the business which I actually do not like promoting or talking about, because it's almost like a joke in the industry, or I guess in the business world, that those that have an MBA typically end up being really shit at business, which is
I agree.
Yeah, and the thing is, it's because it's like this. Sorry if you got an MBA. In my opinion, you've wasted your time and a lot of money. But what happens is that MBAs are typically taught by professors that have never run a business themselves, yada yada yada, and the whole syllabus is mainly geared towards enterprise level businesses, so big freaking businesses. And the way that the world is going right now is that businesses that are filled up with MBA students and people with MBAs, etc., that business ends up moving too slowly, and it doesn't pivot enough because something happens, and then before you know it, you have weeks and weeks of meetings after meetings after meetings, and nothing gets done. I mean, Kodak was probably a good example of that. We all know the Kodak analogy. I mean, they created the digital camera, yada yada yada. Digicameras then killed Kodak, but it's big businesses like that which are run completely by MBAs, etc. And when you look at the stats, I haven't got them to hand right now, the stats of those with MBA holders that actually then go on to set up and run and have a business that lasts more than 5 years, it's incredibly low. So MBA holders are very good at sort of analytics and, I guess, middle line manager or manager type roles where you do need someone that is really deep with the numbers. But I've never made a business plan in my life. Every business I've ever done has literally been on a napkin in a restaurant, and I'm churning out some of the key metrics. And a key metric in business, whether something will work or not, is that you need to, all businesses need sales. How do you get sales? You need leads. How do you get leads these days? It's online leads. And so the typical fag packet sort of scribbles I do in a restaurant or whatever is, okay, if I send X amount of people to a landing page, how many leads am I going to get? Okay, this amount of leads. And then from these leads, what percentage of these are going to become clients? And then you start off with the most pessimistic numbers possible, 1%. Okay, so 1% of leads become a client. Does this business work? No. Okay, well, we need to go back to drawing boards. And then you keep on playing around with the numbers to the point where if if it works with really horrible numbers, then give it a go, put some money into it. But I guess the other folly I see with a lot of the time is that people say, there's this business industry, it's a $10 billion industry or pound industry, all I need is 1% of it. And every time I hear that, a part of my soul dies. And I think that stems from a lack of online marketing knowledge. And it's crazy. I never, ever, ever, ever wanted to become knowledgeable with online marketing. It's always, in my mind, it's always been a very seedy sort of industry, a bit like sales and door knocking, all that sort of stuff. But it's an absolute requirement if you're in the small business world, because when you eventually get good, or a fairly good understanding of online marketing, it will help you become better at formulating business ideas, if that makes sense. So you can then, like, every day I come up with all sorts of business ideas, and I simply just run it through the marketing, and I go, as in, an online funnel or whatever, and you can see in minutes if it's going to work or not. And I guess going back to the questions I had, so I've actually got my notes or the video I made last time. So the first question is, do you want to earn more than $7,000 a month? Yes. Okay. Or if it's no, then carry on doing what you're doing, and that's great. But if you do, the next question is, do you have a potential idea of what business you could do? Whether the answer is no or yes, it still leads you to the same question. The same question is that you then need to start looking at the risk-reward seesaw, which I started talking about. Obviously the reward in business is great, even if it is a small business, the risk is huge. But if you knew about online marketing, it will help you come up with the business idea, whereas most people get stuck at the business idea. So my friend that I was talking about said, I want to be in business. For 5 years, he's been saying, I haven't got the business idea, And I was like, well, have you learned about online marketing yet? And he still hasn't. So, over to you, Lily. Did you say something?
I was just going to chime in there with... Actually, I think sometimes if you are really passionate about a subject, I don't know, for example, cars or houses or whatever, then you will eventually, your passion gives you lots of ideas for businesses.
True.
So currently I've got literally 30 ideas for businesses, and I'm only doing 3 of them. And you can only focus on the ones that you can only focus on. But to be honest, I wish I had more I wish I had other people to implement my business ideas, because I reckon they would bloody work as well. So I guess another question would be, how do you go from owning 2 or 3 businesses to then sort of getting others on a go? Like, how many businesses should you own? I guess that's a question.
That's a really good question. So how many businesses should you own? So again, context, going back to my context thing, and the stage of journey you're in. And this is where I've made so many errors. If I could turn back time. Actually, I probably wouldn't, because I wouldn't have the learning nuggets.
Can I just chime in on this side?
Yes.
Yeah, so just it just might save time to keep it less verbose. In the WAP, where you've redesigned it, there's a really good section on staff, which covers all of this.
Cool.
That you put together. I don't know if you watched them recently, but obviously you made them. It answers Lily's question perfectly.
Sweet. Yeah, if you go to thewap.org, it's like it's like a Netflix for business stuff. Yeah, there's a whole section there. But in terms of like a direct answer to that, so the errors I made is that I started up too many businesses too early. And so from sitting where I have a huge amount of hindsight now, my personal opinion is that until your core business is semi-autonomous and is doing at least 10 to 20 grand a month profit, do not do another business. Absolutely do not do another business. So what happened with me in 2015, 2016, I went on a bit of a spending spree, and I bought like 10 businesses in the space of about 18 months, and it was an absolute royal cluster mess. And I've learned so much as a result. So what happened is I had a really profitable business, which I was very active in, and then I started doing other businesses, which then started sucking up so much of my time. And before I knew it, I ended up with a whole bunch of businesses where I was completely stretched too thin, and they're all doing really pants. And it culminated in 2018, which was the worst year of my life. Again, context everyone. Someone said, "Oh yeah, wait, you must have gone bankrupt and lost everything in 2018." No, I didn't. It was comfortable by all stretches of by normal metrics, but for me, for me personally, it was just shit, because all my businesses were just, it was just horrendous. And so if I was to, so for you look like you're doing well already. I wouldn't look at doing anything else until you're semi-autonomous. And when I mean by semi-autonomous is that you need an ops manager in that business, and then a team of say 3 or even 2. Hell, you can have a really good cell, as in a 3-person cell, and do extremely well. And so in your business, if you get an ops manager who can simply replace you and do everything, and then that person to have some helpers, whether it be an admin person or a salesperson or whatever, and all that happens is the ops manager simply consults you on, hey, here's an issue, here's how I fixed it, and that's how it should be. Your staff should not come to you and go, hey, so I got this problem. Again, it all comes down to training. I've got like a checklist in my office, and it's a problem checklist. So checklist number 1, have you Googled it? Like most of the time, Googling or YouTubing something will fix the problem. Step 2, have you emailed or picked up the phone and spoken to the root cause? Okay, no, okay. Then it's, what would Elon do? And then obviously,
classic.
Yeah, literally first principle thinking. And the team knows when I say what would Elon do, it's me prodding their brain to get their first principle thinking in mind. And again, if you're not familiar with first principle thinking, just YouTube it. And then finally, if they can't pick up the phone or email them or see what Elon's going to do or whatever, then finally let me know. But I just want all of my team know that if there's any problem, I want them to basically come to me, hey Simon, we had this really big problem, however what we did is this. And I'll simply go, sweet, nice one. Or if I don't like their solution, then I'll probably put my little oar in and go, actually, yeah, I like what you've done there, however I would have done blah because of this reason. And you have to give them the reason of, how you came to your thought process. And then guess what? The next time that error happens, well, they won't, it won't be a thing because they would have fixed it. And so when your business is like that and your team, even if it's a 3-person team, is running it for you, then look at doing other stuff. Now, here's the other thing. When you start expanding and looking for other businesses, this is where you will get absolutely reamed on so many different levels. Oh, so many. I've had staff stealing from me. Like, I had one member of staff that cloned the credit cards of other staff members and then stole 75 grand off me. I've had all sorts of war stories. I've bought a business which, even after the due diligence, turns out I bought a dud with X amount of debts, X amount of problems in. I've had there was a business that I bought, and then the business owner, as in my new partner, stole another 80 grand off me, and then used that 80 grand she stole off me to pay for her own legal fees. So she was using my own money to pay her legal fees against me. I've had staff sleeping with each other, and then they break up, and then they can't be in the same building as each other, so you have to move them to different offices or different businesses. There's so many things you can get into. And so the thing that I do now is I will always buy, or I'll do 2 things. I'll either buy 35% of a business, or I'll buy 100% of a business. Do not dick around with anything less than 35% of a business. And here's the reason why. Below 25% in a share, so some people say it's 25.1, but it's not. You have minority shareholder rights if you have 25% plus 1 share. So if you have that, you then have you have a lot of power. So, for example, there's one business where I have, you can have 25% plus a share of a business, and as long as you do the right drag and tag rights, and some exemption clauses, that business cannot do anything without your approval. So everything's in the shareholders agreement and the SPA, the sale purchase agreement. But it's a bit of a myth, which I think is propagated by Dragon's Den, where they say, I don't have control of the business unless I've got 51% of the business. Well, it's just poppycock. It's just rubbish. It's not true. But for me, the reason I buy 35% of the business is that, one, 35% is a pretty good chunk of a business, and two, when I do that, I'm not buying out the director. When I do that,
so they can stay on.
They
and
stay.
Sort of run it.
Yeah, I am simply a silent shareholder that gets dividends every month, and if I don't get my dividends every month, I then go, oi, where are my divvies? So I'm just a silent shareholder, and they carry on running the ship, the train. They deal with all the bullshit, because I don't want more bullshit. No one wants more bullshit, and that's all business is. It's the biggest neodymium magnet for bullshit and problems. You are the bottom of the shit filter, and that as a business, because I'm going to be very stereotypical. Let's say you have a business where, I don't know, errors enter the business, and then your receptionist can bat off some errors, but eventually some errors or problems will go through the receptionist, then it will go to your team leader, that person can manage it, but then eventually the ops manager will have to deal with it, and then eventually there'll be errors and dilemmas and shit that the ops manager cannot deal with, and it has to go to you, the general manager, director, or whatever. So you are always the bottom of that shit filter, and every new business that you buy or acquire or whatever, you just want to mitigate your way around that. So I love 35% of businesses, because I got ultimate control. I can do whatever, the business can't do anything without my approval, and I get a nice chunk of divvies, and the remaining 65% that the director has, it's still, it's a nice chunk, and their skin is very much in the game. And also I'm adding, systems and capital sometimes. Now, if it's a business where I really want to do things my way, I'll get it 100%, as in I'll buy out the full business. But be aware, when you do that, it's going to be sucking up all of your time. And I've got to the point where I now am trying to whittle back down to 2 core businesses. That's really all I can do. Like, I think
that's interesting.
Yeah.
Did you say 30 before?
I've got 9 right now, and I'm trying to get rid of 7. So, but mind you, maybe 3, because what I found is having a marketing company. So I've got a marketing company which does design, graphics, and digi marketing. That's incredibly useful, because whenever I buy a new business, I simply parachute the marketing company in to pimp it up, and it does things. So, for example, there's one business which this is painful. So it's good and it's also bad. So there's a business which I bought 35% of, and I did it on a call option. So effectively, I call it NORA, no risk acquisition. Now I know, warning alerts will probably chime up now when I say the word no risk, but it genuinely is, because what happened is it was a lovely business, wanted to buy it, so I bought a £1 call option. So I had the option to buy 35% of that business at any point over the next 2 years with a strike price of 50k. And there's a few other clauses, etc. So what this meant is that if after, normally after about 3 to 6 months, you'll know if you're going to get on with the director or not. And so worst case scenario, I lose some of my time, but also as part of that, they were also paying a £3,000 plus VAT per month retainer fee for my marketing company. So they had full unrestricted access to my marketing business. So that was the £3,000 a month bit. So it really was no risk for me. But the thing is, you're sort of aligning incentives, because if you do really well, and let's say within 2 years, that 35% is worth more than 50 grand, well then great, you're getting a bonus. Because when you execute that option to get that 35%, you only pay them 50 grand, but the business is worth more. But here's why it really is a no risk acquisition, because don't forget, that company was paying me £3,000 plus VAT per month, every month, for 2 years. So what is £3,000 a month times 24? I think it comes to like 72 grand. My maths is awful. 3,000 times 24, 72 grand. So what happened? So over that 2 year period, that company paid me 72 grand in retainer fees, and then in the end, I exercised the option, and effectively gave 50 grand of their own money back. And I had I got 35% of that business for £1. Oh no, actually they paid me a bit more. But because we implemented a whole bunch of systems, that business went from what was it? It was doing 10 grand a month revenue when I got in. So to the point where just before March we were doing 350 grand a month revenue. Now obviously revenue is a silly thing, as I said earlier, but I just want to show you the scale of how much we grew it. And then in the space of a 15-minute Boris announcement in March, we lost 150 grand a month in revenue in literally 15 minutes. It was the biggest kick in the balls ever. Cheers, Boris. So going back to your question, it was a really long answer to your question. When should you? I think don't do it until your existing business is solid and you genuinely have surplus time and you have enough profit. Because what will happen is that the moment you start diverting your attention, your profits will go down, even if it doesn't really need you. And try and build, have congruent things to your empire. So you're an architect. So you're actually.
Oh, this was actually going to be the next question. So essentially, I guess the other businesses actually team in really well with architecture.
Exactly.
So, for example, well, I don't want to go too much into my business plan basically, but there are other things that architects can do, such as construction companies and artwork and these kinds of things. And I don't want to go too much into it, but I'm planning on like a whole dominating kind of new wave architecture type firm, which is essentially a one-stop shop. So that's actually what I'm talking about. So, but in a way, I feel that they are separate businesses, that they're just coming together under one roof. But that is the one business at the end of the day.
I use your example all of the time, because when I talk about congruent businesses, I say, imagine you are a building company, and a building company has a really terrible exit multiple, at best 3 times exit, or 3 times EBITDA, or these days 3 times EBITDAC, and the C is COVID. So earnings before interest, tax, depreciation, amortization, and COVID, because that has changed a lot of businesses. So if you're a building company, the best freaking business to buy out, or at least get a chunk of equity in, is an architect firm. Because where do all of your leads come from? They typically come from architects, don't they? If you're a building company. So then you buy up an architect firm. What else could you do? You could buy a scaffolding company, a plumbing company, electrician company, blah blah blah. And before you know it, you're now a facilities management business. You're no longer a building company. You're a facilities management firm, and now you have a reasonable exit multiple of 7 EBITDAC. So so you need to be congruent, and don't do what I did. I bought all sorts of stuff. At one point, I had the UK's biggest pottery factory, Hudson and Middleton's. It had the Royal Seal. It had everything. It was a massive complex in Stoke. What on earth was I doing buying a freaking pottery company? I've got a flotation centre as well. What was I doing a flotation company? There's so many random businesses I've done. So try and stay within your lane, so to speak. Unless you're Elon Musk. So obviously he's gone out in all sorts of different industries, but he's Elon, as I said earlier, worst role model ever in terms of business, direct business. He's the most inspirational and probably most inspirational role model you can ask for, but probably not the best if you're trying to copy his business activity.
But they are all engineering, be it software or hardware, they're all engineering.
Exactly, yeah.
And I probably will go into sustainable energy anyway, because that's actually a lot to do with the built environment. So there is another avenue there as well.
And the World Economic Forum is going to be pushing for green projects like no tomorrow. So it's a massive wave.
Already.
Yeah, I know. I mean, we've already got the green gilts. So the UK government are already issuing gilts for green energy type stuff, and pension funds can invest in green projects now. Which
you can get green mortgages as well, and there's a whole bunch. If anyone's interested in sort of how to finance green builds, I'm good to talk to. There's a whole fund there's many different funds open for that now.
Nice. So, okay, one last thing. I think we've been going for quite a long time. I'm just going to talk about one other thing which you mentioned, and then I think we'll have to call it a day. It's been an hour and a half almost, where you talk about passions. And so it's a double-edged sword. So you're spot on. If you have a genuine passion in something, it will really help with your business idea, because there's all sorts of business ideas you can do around your passion, simply because you have a very deep knowledge of that passion. And I'll talk about that in a second. But the flip side, as I said, double-edged sword, the downside of pursuing businesses with a passion is that it will most of the time ruin your passion. It'll absolutely ruin it. So I started off a lot of my earlier businesses following my passion. So I left the Air Force. So what was one of the first businesses I did? I was like, well, what are my skills? My skills are flying. I can fly helicopters. Okay. And so I set up Fly Siam Aviation Services, which are simply helicopter wedding flights, helicopter charter flights, all that sort of stuff. Guess what? That quickly ruined my passion for flying, because business is a thing, as I said, it's a shit magnet, and it will ruin your passions if that business doesn't do very well. And guess what? It didn't do very well. So then what did I do? I got into trading, because I'd already traded for probably a decade by then. So I set up a trading business and very quickly ruined my love for trading. And it's like an on and off sort of thing. What else? Bubble football. So, you know, where you wear a big zorb around your body and play five-side football? It didn't exist in the UK. I saw it on YouTube and I was like, I really want to play it. It didn't exist, so I thought, screw it, I'll do it. So I set up the UK's first bubble football business. Very quickly, I cannot stand bubble football anymore. Another one, gold and silver. I love physical gold and silver. And I've been investing in it, buying physical gold and silver since 2009. I became a gold and silver bullion dealer very quickly. And now, I don't hate gold and silver, but it got rid of my passion for it. I love floating, where you go into like a flotation pod where you float on water, shut it, you're butt naked, it's pitch black.
Hydrotherapy.
Yeah, it's flotation. I guess it is a form of hydrotherapy, but yeah, you're floating on 12 inches of saturated Epsom salt water, and it's good for your skin and stuff. So I set up a float company in Norwich, and now, ironically, I haven't floated in over a year, and it's just a pain in the ass. So that is the flip side. It can ruin your passion if you're not careful. Now, in terms of business ideas, like the most recent idea, which I had about 18 months ago. Like I said, massive Elon fan. When he started talking about level 5 autonomy, and for those who are not familiar, level 5 autonomy driving is where you can jump in the car, pop in the postcode, and then effectively go to sleep, have sex, read a paper, whatever you want. And then you'll rock up at the house or the destination. That is level 5, where you literally do nothing. It's like getting into a taxi. Now, level 5 autonomy is inevitable. It's not if, or it's simply a when. Now, when that comes in, and Elon started talking about robo taxis and stuff like that, I instantly had a business model idea, which I don't think at the time anyone had. And my idea, I think it really came across when he said that you could effectively pimp out your car, because you only use your car probably 2% of the day, because most of the time you drive to work, you leave it in a car park all day, you drive home, maybe go to the shop or the gym, and that's it. The rest of the day it's just sat doing nothing. So when you can effectively pimp out your car like an Airbnb, and he's already made the app where the Tesla app is like a cross between Uber and Airbnb, you'll be able to earn revenue. And he said typical low estimates is that you can make $25,000 to $30,000 per year by pimping out your car. So the obvious business idea that to me is so obvious, but not many people have picked up on it yet, is that instead of doing buy-to-lets with houses, I'm simply going to buy as many Teslas as I can. Because if each Tesla makes, I don't know, let's just be pessimistic. If a Tesla in the UK will make you, I don't know, £15,000 per year, and the car, and let's say the Tesla itself is only 30, well, that's 50% ROI just in year one. So after 2 years you break even, and then the returns are infinite after year 2. And by then, by the time level 5 is allowed in the UK, he'll probably have the Tesla 2 out, which will be a very cheap version. So it's probably only going to be like a 20 grand, like a 2-seater smart car type thing. And all of a sudden the ROI gets a lot better. So straight away, there are two easy business models there. There's the retail side and the commercial side. So the retail side is buy as many Teslas as possible that have level 5 autonomy, and then you pimp out your cars. And the yield is just ridiculous, even conservatively speaking. And I've already priced it up with the taxis in Norwich, because I'm based in Norwich. And the average taxi journey, I think it's 3 miles or 3 to 5 miles in Norwich, and that average fee is £12. Well, with like a level 5 Tesla that you pimp out, you can charge 50p a mile. So that journey, all of a sudden, you've 10x the costs down. So I'm pretty sure I could take out every taxi company in Norwich when this comes out, and that's my goal. So, but it's not just that. The commercial side is lorries. So 97% of everything on the planet is moved by truck, as in articulated lorries. Now, he's already got his thing called the semi. He calls it the semi. It's basically, in the UK, an articulated truck or lorry. When that's fully autonomous, it's going to be one of the easiest business acquisitions I'll do. Because when you look at and I've already spoken to a bunch of haulage companies. So if you take a relatively small haulage company that has, or not relatively, a very small haulage company that has 10 articulated lorries, the average running cost per lorry is 100 grand a year. So don't forget, you've got the human salary, as in the driver salary, holiday, PAYE, all that sort of stuff. You've got diesel, you've got the servicing, you've got the ball bearings, and all that sort of stuff. So it's roughly 100 grand a year in cost, just per lorry. Well, imagine if you had 10 Tesla semis, which didn't have any of those costs. And so obviously there's going to be some costs like electricity and all that sort of stuff. But instead of being 100 grand a year, let's say it's 20 grand a year. So all of a sudden you're saving 80 grand a year per lorry. So if I can buy a small haulage company that has 10 vehicles and replace them all with 10 Tesla semis, straight away I've made 800 grand a year saving straight to the bottom line, or the moment it's all implemented. And 800 grand a year, what does that, divide that by 12? That's £66,000 a month of profit from day one. And so one of the things I'll be doing is that, and if that works, all I'll then do is add a zero. And okay, the next haulage company I buy will have 100 lorries, and see how that goes. Obviously, there's going to be a fair amount of financing, because I think it's, $250,000. I don't know what it will be in pounds, probably £250,000 per lorry. So it'll be a bit of financing, so you've got debt servicing costs in there. But yeah, that's how you sort of brainstorm around a particular thing. So
something I'd add to that, if it's okay.
Yeah, do, mate.
Is also to be very, very aware. You mentioned taxis and something I've been looking at as well is decaying business models and structures.
Ooh, yeah.
There's a friend of mine who owns a private ambulance company, and when we do reach level 5 autonomy, your car will take you to the hospital. Now,
exactly.
Now, at the moment, I think it's about 94%, my friend said, of ambulance visits require no medical intervention whatsoever. They simply scoop and take you. But the profit per mile of any transport is the highest for ambulances. And so when you get to this, with Tesla doing that, it's going to decimate that industry of ambulances.
Yeah, in the US especially, because that's where,
yeah. So it's just to be aware of decaying industries as well, so people don't walk into slaughterhouses.
Yeah, exactly. Like I went skiing with a mate. Some of you may know him, Dan Bradbury. He's in the UK business scene, and we were skiing in Aspen, and he's never skied before. And in the first 30 minutes of skiing, he had this horrific injury. It was funny at the same time. Like half his arm was falling off. And
did he dislocate his shoulder?
No. His ski, the front of his ski, carved a massive, I would say, 5-inch hole, or into the back of his arm. It's horrendous. Like I could see cartilage. I think we could see bone. It was deep. It literally sliced through all of his clothes, and I've got pictures on my phone, and it's gory. Anyway, so he got the he had to get taken off the mountain, and they put him in this little there were no like skidoo things, so they got this stretcher thing and they wrapped him all up in that, and the guy skied down the mountain and I had to ski behind him, and I'm a good skier, but this guy that I was skiing him down was like, I was having to tuck and go straight line to keep up with this guy, and then there was Dan like he looked really scared. Anyway, we got to the bottom and we basically had two options. We either get an ambulance to Aspen Hospital, which was, I think it was like a 15-minute drive, but the cost would have been $2,500, or we get an Uber. And so we're like, yeah. So we just got an Uber to the hospital. So as Adam said, that US privatized ambulances are going to die, for sure. Any questions? Or shall we call it a day there, folks?
That's great. That's good.
Cool. Well,
Thanks, I thought that was really good.
Ah, nice.
Yeah, it was really good time. Cheers.
Ah, thanks, Harry.
I did have to dip out for half an hour, but came back in the end. Yeah, really enjoyed it, mate.
Ah, thanks. Yeah. Hope it helped everyone. For those who I've got some random names here I've never seen before, so I hope it's helped. And I guess we'll have to do this again. I don't know when, but yeah. Well, I've got to love you and leave you, and see you. Yeah, see you soon. Thanks for your input, everyone, and Lily and Adam.
Cheers, man.
Toodles. Bye. Now we're going to figure out how to stop this thing. End room. Bye.